Welcome to TradeTheMBA.com. This is John. This report is for the 4th of March. Well, the market was a little bit lower than caught a nice run, but was unable to sustain that and finished off just below that 38%. What was more critical was this pivot down here on the MBI magenta, and it moves it below white, 37.8 versus 36. So that begs a bit of weakness, but contrasted by the DOC where you have green rising above cyan. So I would expect the green here to pivot lower and cyan to move up if we're going to see any continuation for a downside, because we're still above 33 with the magenta. You need to be below 33 before you really would expect to have a significant drawdown, but it's clearly a warning when you see that kind of pivot. But any pivot back up of magenta, and we will be looking for at least a move to the 50%, if not a break, particularly if the green DOC here maintains itself. We've already been seeing rise and shakeout. The question just becomes, is it enough momentum to really move past the range? I mean, this was the first break of the consolidation range, and it still got met with significant selling. And part of that, is a reflection of Powell's comments from the other day, where he literally opened the door to a major change where more than one reserve currency. This is sort of an understanding in the market that the sanctions and things that have been placed on there are going to have a negative effect for growth as well as trade, because what it's suggesting is that there's going to be a lot more trade taking place not denominated in US dollars, and that could have some serious implications down the road. And that was kind of a warning. It's not an immediate threat, but it's an indication that you've kind of put things upside down a little bit from the financial standpoint, where now you're looking at a situation almost the reverse of the 80s, where the U.S. starved Russia of money by, the arms buildup, but now you've sort of got the inverse where inflation is out of control. We're looking at the NQ, and again, it hit its 38 and rejected from there. And with that inflation out of control, and here we have oil, well, all you're doing is making Russia wealthier, because as oil prices climb, and they're not done, this is only going to get worse, because they can adjust the constraints on supply, because the U.S. has already done it for them by limiting their own permits, stopping any new leases. You have Europe moving away from nuclear and everything else, going to green, which just forces them back to natural gas and those kind of things, which really force them again back to buy from Russia. So as much as they canceled everything else, they're still giving them the money they need, and Russia's equipped with plenty of gold reserves. They're preparing for this, and they've set up their bilateral agreements with China and other countries to trade goods. So it'll be interesting, because you start getting oil towards that 150, 180 a barrel, and who are you really hurting? You're really hurting the Western economies. Well, at least the regular citizens are the ones who are going to suffer from that, and that's of a huge impact, and certainly will affect the market, because at that point you're going to see likelihood of recession dramatically increase. Gold, again, as oil is going to continue to move, it's going to continue to skyrocket. They're still bullish on all those readings. And so it's important to understand that macro view, because as I've been talking to about the ECB, the European Union is broke. They're handing out ECB bonds to banks in, Italy, Greece, everywhere else, that are basically worthless, because they're, negative from their central bank, because it's not quite the same as the central banks of the Fed and other countries. So it really, from a Eurozone standpoint, it's not good. And like I talked about before, I expected this to go back towards the 108 net, because these realities were already taking hold, as the U.S. really isn't supplying any credit, at least the private banks, to the European Union, because they understand the situation there is quite dire as far as creditworthiness goes. TLT, a little bit bounced back there to stabilize things just a bit, but again, the expectation is still that yields are going to rise, and that's going to fade. Of course, Powell suggesting there's only going to be a quarter rate hike is not going to do anything to even stem inflation. It gives them zero power, because they really can't raise rates to any significant degree, because the deficits that have been run and are currently being run, not to mention the debt itself, would make it just too expensive. And this is the problem that the ECB encounters as well. you really don't have the latitude. So as that inflation comes, you sort of gave Putin the green light to do what he's doing, in the sense that he knows that there's some crippling economic situations that are going to arise from this for the West, and really isn't going to have that impact in the East. And Bitcoin, as the selling was taking place, filling back, and of course this is filling back for some of those positive extremes that we had from over here. So that gap being filled, perfectly healthy. Does leave the initial breakout, but I think the gap fill for these prior extremes could be enough with that low reading right there, and we're seeing the orange dipping. Usually I look for it to dip below 7.5. It's usually a rallying point. ETH also suffering late day sell, liquidation there. It was pretty darn clean, and as I've pointed out, ETH really produces some very nice results with the algorithm, so it's pretty good. This was sort of the interesting part on the 50K. We were fading down here, and I was talking about this as it was taking place when we were looking at our sell signals. We were approaching the 43.51, and we were talking about it made more sense to look at that level as well as the 50%, which happened to be just a fraction over that at 47. It's worth taking significant gains on that kind of a fade off, knowing that at the 50% with the weight MBI leading is a likely point, particularly since it reached the oversold. And once Magenta came back over it, still had time where it then dipped down, but bought right back up on that 43.51 algo level, and posting a positive setup at this particular stage with full orange dip right there. And then when we look at our 5K intraday, so we started out with a nice build pre-market, all on positive extremes, going all the way back to the 80 level here. We had the previous ones a little bit higher, and so as soon as the sell came, first one was filled, then filled all the way back to the 80, and then just kept sliding from there. And we were pointing out these little kind of things where every time we get the magenta dip, when you're under that 25 range, becomes attractive points to take the dip. Then we'll start to watch for build of shakeout, as well as any improvement from DOC green and or red, moving back above 13. Actually, so it's easier to see it. There we go. And then by the time I did the second setup here, that was perfect configuration, still moving above 13.5, so that's the effect of it coming from underneath, and that caught a nice little spike up from there. Even if you missed that one, you're able to catch it on the pivot back up, and then it kind of just traded back and forth with some intermittent signals. But as the short setups were coming, it's one of those where I look for continuation patterns of those, where you get either spacing between red, cyan, and orange fitting in between, but when it breaks down below and steel rising, it's sort of your turnaround point, and we get the pop. And then we've talked about the other ones. Sometimes you get these initial moves that dip down, particularly when we get shakeout over 50. In this case, it wasn't quite over there, but then you ended up with a second lower shakeout histogram. So by the time it did that one flattened out a little bit, but it just literally traded across for the most part. Interesting though, with the amount of MBI white leading magenta, still by configuration within there, but you know that it's going to be a bit back and forth, because until you get either the magenta clean above and riding high, you're going to face that kind of back and forth. But as soon as it rolled over, magenta below 25, white was still above it, and beautiful cascade right down. And then we started basing again, P2 pivot, getting higher with the shakeout, higher with DOC red, and that led to the beginning of buy configuration. It stayed red right there only because the white was leading. In this particular case, going to make some adjustments for that configuration in the code, particularly when we know we've got green over red DOC in that, and until it actually flips, so there's a meeting point rejection. That's going to stay with that to the upside. But again, this volatility doing exactly the Fed kind of wants, which it's making liquidity a little bit lighter as some people pull out. And that's where looking at that TLT is important, because it lets us see how much of that is moving towards bonds and becoming more stationary, sort of reducing the liquidity of nature. Everyone still believes in buying the dip. There's been nothing to indicate that you can't. But as we pointed out earlier here, there are plenty of reasons that at some point that's going to shift. And then it becomes the guess. Some people have guessed the Fed put us at the 43.50 range. Some think it's down towards 38. Unfortunately, they won't know until selling exacerbates. But at this point, I'm coming into the fourth. This is right about when new fund money comes in. So some people having bought this in anticipation of all that new money flowing has got to go somewhere. And if any of it moves towards equities with the degree of stocks that have sold off, they may think they've got opportunity to buy something cheap, unless they're looking at that situation with oil and that saying, I might need to wait. But we're going to start to see that in readings first and be able to adapt accordingly. As always, though, I'll keep updating you on SkypeChat. Trade well. Talk to you later.